of December. This is a crazy busy trading week. It's going to be the 12th through the 16th. We have CPI data from the US. We have 4 central bank rate decisions, and we are going to trade it all. So let's get started for today's poll report. First things first, we understand it's risk in trading. Please and always use trade capital only. Do not trade money you cannot afford to lose. Whether you change stocks, options, futures, forex, cryptos, you know the risks. If you follow me on social media, make sure it's the real me. YouTube.com/Chris Pulver. This week, session on Monday, session on Friday. We're going to sprinkle in a bonus session at 2 p.m. on Wednesday if you'd like to trade FOMC with me for the US rate decision. Any messages coming that look like me, it's not me, right? If you message me, I'll reply, but I'll never reach out and solicit or, say anything shady. So, you know the deal. Kick off those scammers and spammers and all that stuff. All right, let's get into the markets. Let's take a look at the news, the economic news. GDP for the pound Monday morning came in better than expected. I think things really heat up in the meat of the week. Tuesday, Wednesday, Thursday, we have employment news out of the UK. We have Bank of England, Governor Bailey speaking. Then we get into the real data that I can kind of think the market's watching. Everybody's watching. I'm watching. CPI data coming out of the US. So this is another big inflation reading. We're forecasted to see year over year go to 7.3 from a 7.7. So let's see if we have another big drop in inflation data. Is it 0.4% better? Is it better than that? Is it 7.2? We're going to find out. But if it's higher, that's probably not a good thing. We'll continue to have that sticky inflation. Concerns going into the end of the year with the Fed raising rates on Wednesday. That inflation remains higher, stickier, lasts for longer. Fed remains restrictive, carries on interest rates through 2023, but it's going to unfold this week whether you like it or not. All right, so CPI data coming out Tuesday morning at 8:30 a.m. CPI data coming out of the UK, 2 a.m. Eastern time, or this should be, I believe, 8 a.m. London time for the Great British Pound. CPI data coming out at 2 a.m. Eastern time, Wednesday the 14th. Again, big prints. 11.1 previous, 10.9 forecasted. Crazy high inflation readings out of the UK. And then Wednesday afternoon, Fed is expected to raise rates 50 basis points or 0.5%. Jerome Powell speaks at 2:30. So if you'd like to join me, I'll have a YouTube session starting at 2 p.m. We're going to look to see how that hour unfolds and see if there's some noteworthy trading, in and around the news, around the press conference. We have New Zealand GDP at the rollover for the day. Aussie employment, Swiss National Bank the following morning, 3:30 a.m. Eastern time. They're expected to raise rates by 50 basis points. So as we've seen with a lot of central banks this year, tightening monetary policy, raising interest rates. The ECB is looking to raise interest rates, I think. There's the press conference. Yep, another 50 basis points. So if the Swiss raises rates by 0.5% and the ECB raises by 0.5%, again, these are all what we're seeing here from the forecast. We had class on Friday for the poll report. Didn't see any of this happening. We see the Bank of England looking to raise rates another 50 basis points. So central banks continue to tighten, kind of taking lead from the Fed. And it's going to be a lot of volatility this week. So looking forward to trading some dollar crosses, some pound crosses, some Swiss pairs, some euro pairs, and see how it all stacks up and unfolds. Hopefully we get some good clean movement. We'll be using some master flex strategy most likely. See if we can follow some good flow for the week. And then Friday to wrap things up, PMI numbers come out of the Eurozone. Okie dokie. All right, let's go into the charts. I'm going to start things off with the dollar index and the SPY. Let me log into YouTube, say hi to everybody. So give me one moment. There we go. All right. So we are seeing Donna first thing in the morning. Nice to see you, Donna. And Greg, Lawrence, good morning. Gary, good morning. Chris, good morning. Ruth Ann, good morning. Tony, what's happening? Tom, hello. What's up, Jason? How are you? David, good stuff. All right, morning, David. DPS, good morning. Rick, good morning. Brad. Zip. Dennis, good morning. All right, nice to see everybody. Okie dokie. Let's take a look at the dollar index. This is the DXY. We did hit our, let's go to the daily time frame here. So the dollar index on the correction that we were planning did go ahead and hit the 200 exponential moving average. This is going to be an interesting week for all the news that stacks up how it plays out. Right now, the path of least resistance from this recent high is to see the dollar get a little bit softer. Okay, now that being said, what I see here is this line is past resistance. This line was past resistance that became support. It wouldn't surprise me if we just continue to work our way down towards that level. This is around 103, and we start to bounce back up. All right, so I would be looking for something like this on the dollar index. A bit more of a correction into this 103 handle, possibly a spike down into it, and then a push back up into this monthly pivot and into this breakout pocket around 108. So that being said, a couple ways we can look at this week. If we have a continuation to the downside, I would be protecting profits if you are short on the dollar, and then looking for shorter term entries to start looking for long dollar to carry out the rest of the week or even into next week. And remember, the last couple of weeks of the year, oftentimes the market will kind of find itself in a drift of some sort. So if the dollar puts in a little bit of a bottom and starts to rally, we might see the dollar rally for the remainder of the year for the next couple of weeks. All right. So structure wise, that's what I'd be looking for. This 103 level would be past resistance becoming support. And then from there in the short term, I'm looking for a little bit of a bounce, come back to this monthly pivot and some of that breakout pocket space around 108. We'll see how that trades. So I'll be looking short term primarily on dollar crosses. If we go to the SPY or the SPX, we're trading at 39.34. The SPY is trading at 393. Still have some bear call spreads running. 385 to 390 is key support. And if the bears break it this week, look out below. Right. So again, as we've seen this entire year, the dollar index has been a big correlation with the SPY. Dollar strength equals SPY weakness. Dollar weakness equals SPY strength. And we'll see how that plays out. So anything below 385, I think the bears reclaim and maintain momentum. We might be pricing in, worse things. We might be pricing in stickier inflation. We might be pricing in restrictive growth. We might be pricing in stagflation. We might be pricing in the deepest yield curve we've seen since 1981. There's a lot of stuff going on there. But somehow, if the markets can stay buoyant around this 390 handle, maybe it just oscillates here between 390 and 400, and we have a bit of a holiday consolidation, and then we figure out what happens at the start of the new year. Same thing or reversal. I would venture to say that more negativity is ahead, especially without hitting the pre-COVID highs from February, March 2020. I mean, we've literally said that from the beginning of the year. That would be our ideal kind of correction zone that gets us into that 30+% area. The bear market averages over the years have been 38%. The duration's been about 15 to 16 months. And so taking us into the, first half or so of 2023, wouldn't surprise me if we hit 340. If we capitulate lower, I mean, there's room down to 300 on the SPY. Okay. So we'll be watching all this and see how it can be unpacked this week. All right, that's dollar index and the SPY. Let's take a look at oil. Oil trading at 71.4. Well, let's say 71.50 right now. We're right off of the yearly pivot. There's a yearly pivot sitting here at $70. It's around 69.35. Oil could be spike worthy this week. If we bounce off these lows, look for a spike. We capitulate a little bit lower into this 65 handle, I'm still looking for a spike. So in the near term, call it the next 4 to 6 weeks, I would be looking for a pretty decent bullish pop on oil. Okay, and the reason I say it might take longer than just this week is maybe it's path of least resistance. Maybe it's easier to drift lower, 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 lower. Why is that? Well, because we're still seeing restrictive central banks and we're seeing continued lockdowns in China. So if that continues to be the theme, oil hasn't had a good run because of those combinations, right? So we come back into this level that we've talked about, $65 to $70 major support. But I do think that some decent structure in here, a little trend line break goes a long way, possibly a falling wedge of some sort, key levels of past support to hold. And then we see, how much of a recovery do we get? Do we have a big jump? Do we go from like 65 back up to 95? Not sure, but I'm looking for it. So a couple positions I like in Forex. I am looking for some CAD strength in the next couple of weeks. Hopefully this week because it started to line up really nicely last week. So I took position on CAD Swiss long. I'm looking to fade a move on Euro CAD up at the yearly pivot. I started to take a small position short on the pound CAD, and then I took a position long on the Aussie New Zealand. So we talked about this last week in the trading rooms, and I just got dog food all over me. Sweet. Thanks, bro. Okay. All good? All right. So that's US oil. Let's take a look at cryptos from the weekend. Bitcoin trading at 17. So right around 17K. Bulls are going to have to reclaim 21,000 plus. Bears are absolutely in control. Volatility's quieted down the last 6 weeks or so. 1, 2, 3, 4, 5 weeks, I should say. That 6 week was a big drop again when, all the drama with FTX happened, which is still playing out. But Bitcoin trading at 17,000. Ethereum holding pretty steady at 1250. Has not come down to that 950 level or $1,000 support as of yet. Pretty simple, daily resistance at this 200 EMA. I'd say bulls need to reclaim, the high, of course, and get above the 200 EMA, and maybe our analysis can shift into a little bit more of a bullish run on Ethereum. But until then, this might just continue to go lower. This might continue to go sideways, and eventually we look to see if there's a breakout to the upside. Maybe a range trade to a target around 2,000, but between 1,000 and 2,000, I'd say Ethereum's pretty contained for right now. Okay, yep, you are spot on there. Lots of news this week. We just talked about that first thing. So, I'm focusing on Tuesday, Wednesday, Thursday. That's really what I'm focused on news-wise. CPI data from the US. We have, CPI data for the pound on Wednesday. So UK CPI data, which again, slight improvement. 11.1 previous, 10.9 forecasted. And then of course our central bank rates. We have 4 central bank rate decisions slammed into this week: the Fed, the Swiss, the pounds, and the euro. All those central banks are looking to raise rates this week. All of them looking to raise rates by 50 points. So Swiss would be at 1%. Bank of England would be at 3.5. ECB would be at 2.5, and the Fed would be at 4.5. So if the Fed gets up to 4.5, let's check cbrates.com. I'm pretty sure that Canada is sitting at 4.25, so that'd put the dollar slightly ahead of Canada. And also with New Zealand, New Zealand's sitting at 4.25, so that put the U.S. slightly ahead of that as well. Again, there could be other rate decisions like New Zealand maybe by the end of the year, maybe going into January. Do they raise rates once again? We'll find out. We still have to see what the Fed projection is. Let's take a look at that CME watch tool. So higher probability the Fed's going to come in with that 50 basis points hike for this week on Wednesday. We go into February. February right now is forecasting, again, this is all subject to change this week. So let's make a mental note here. We take a screenshot. Let me see if I can get a screenshot of this really quickly. So expecting 50 points for Wednesday this week. Go into February, and looks like it's kind of a toss-up between a no rate hike and a 25-point hike. But I'm going to take a screenshot of this so we can compare this on Friday to see if the market kind of digests this news differently based on the press conference that's revealed from Powell on Wednesday afternoon. But I'm going to make a timestamp here. So this is as of Monday, December 12th. Okay. So just want to note this because if this shifts Wednesday during the trading day or end of day, it shifts on Friday as we discuss it to wrap up the week. We're going to see what the market kind of expects moving forward. Now going into February, again, slight rate increase maybe by 25 points. Going to March, 4.75 is the highest probability. We're not cracking that 5% level yet. Going to May, still not cracking that 5%. So, well, I say that this is for May. Okay, so it looks like a potential 25-point hike between February and March, maybe another 25 hike in May. Anything, let's just go end of year. I mean, the market is anticipating by the end of 2023, the Fed's going to be sitting at 4.5%. So whether we go to 5% plus and then backtrack down, or we just slowly incrementally make our way to 4.5, the Fed's been the main theme all year. It's not going to change going into 2023. Just get used to it. It's annoying to see like how much clout the Fed has with the markets, but it's essentially been the backstop for the last 14 years for a bull market. It's been more, I'm putting like air quotes around transparent, because I think all that's doing is disrupting free market pricing, because it's all about what the Fed is doing. Anyway, doesn't matter. It's been frustrating. We've talked about it. Okay, but yeah, you're right. A lot of news this week to digest, so we'll do our best. On that note, I do have, let me check Telegram here. I had some trading rooms last week. I shared an updated schedule. Let me see where I posted that. I think I posted it in the Master Flex Telegram. Let's go to Flex. Yep, right here. So here is the schedule for this week. So doing the YouTube session this morning, Tuesday, Wednesday, and Tuesday, Wednesday, Flex Trading Room is at the usual scheduled time, 8:30 a.m. Eastern Time. Wednesday afternoon at 2 p.m., I'm going to run a YouTube session for FOMC so we can trade the U.S. rate decision together. Thursday morning, we're going to have an extended kind of a double flex session. We'll start at 7 a.m., look to trade some of the pound crosses with that rate decision, and then the ECB is at 8:30. So we'll try to trade some pound crosses, euro crosses on Thursday morning, and then Friday we'll wrap things up with the YouTube session to close out the week for the Pulver report, and then Friday 1 p.m. Eastern Time is a Masterflex session to review strategies and the robot. Okay, so take a note of that. And let's get back into some charts. So currency strength for today, we have Euro, Pound, and Swiss on top. Dollars baseline. CAD is in the middle. Aussie is a little bit weaker. Yeah. So we're going to see, like I said, I did take a small position on Pound CAD to the downside. I'm looking to just stay patient on it for a bar count. CAD Swiss still going a little bit lower, but I'm monitoring that one closely for some pullbacks. Looking to fade a Euro CAD move around 1.47, 1.48. Aussie New Zealand, I'm looking to get long and see if it can pop back up towards 107, 107.50. So trading small on those pairs. Let's take a look at some other currencies that we like. We set up a couple of robots last week on Aussie, Swiss, and New Zealand Yen. We set that up with Masterflex. Aussie CAD. We've already hit the yearly pivot around 93.85, but there could be room to still climb. So if we have any pullbacks, we can still look for Aussie CAD to continue to challenge this high around 94 to 95. I like Aussie CAD long until those levels are hit. We've had a nice profit already taken on the Aussie CAD, but there's still some more. Aussie Swiss is kind of range bound for right now, but if we break above 64.50, I like long. Aussie Yen, this is kind of a no trade situation. Aussie New Zealand, we're going to see if we can get some oversold conditions to pop back up and find some pockets around 107. Aussie dollar, dollar's going to dominate this week. Just be careful. There's room to get back to 6,900 to 7,000 if we see dollar weakness. My concern is that we're barely making new highs. And so this would be fitting for the Aussie dollar to show a correction this week and look for some dollar strength, especially if that DXY hits that 103 level and looks to bounce hard. CAD Swiss, we've had a big drop in the CAD Swiss. I mean, multiple daily candles in a row, in fact. 1, 2, 3, 4, 5, 6, 7, 8, 9. We go to a weekly time frame. I feel like we also have to line up quite a few weekly candles in a row. This lines up 1, 2, 3, 4, 5, 6. So we've got 5 of 6 weekly candles bearish. We have some oversold conditions on the daily time frame. So again, in the near term, looking for some stability here near the lows, couple of pivots lined up, and see if we can start breaking some trend lines and heading back in some pocket areas on the CAD Swiss. Again, oil might have a lot to do with that. We're going to see if oil can bottom in that $65 to $70 support level, and if it does, it could thrust the CAD up with some strength. CAD Yen, we've already taken profit on that one from a short at 104.50 down to 100. Swiss Yen pushing back up, and hopefully we're going to see a couple of things here. We have our high from the BOJ intervention. We have our low. The Swiss Yen may make its way back to the same high, but I'm looking to fade that back down. Or we just end up breaking lower, taking it down to a projected move around 136. But going to see what happens on the Swiss Yen first. Euro Aussie, that's a no trade situation. Euro CAD, Like I said, making its way up into these pivot levels, 146, 147 and change. We do have some really nice pivot alignments as well. Take a look at this. So weekly, and monthly, really nice pivot alignments happening. If you're trading it, trade it small. I'm willing to take this trade up into these highs around 147 to 148 before we start to get a pullback. So we'll see if we get it. Also really nice structure here. Past support became resistance right around 14600. So it could be a nice sell trade off that 146 handle between 146, 147.50 on that Euro CAD. Euro Swiss 98.48. This would be an interesting week to see if the Euro Swiss can start to break apart. I'm still looking to get long on the Euro Swiss and looking at both central bank rate decisions this week. They're both going to raise rates by 50 basis points. So they say. Does the market price it indifferently? I don't know. But there's a pocket. There's a 105 resistance level. There's a yearly pivot at 106. So I'm still looking to see if we can get above this 200 EMA, clear out this move above 1.00. And if so, I'm looking to stay long in the Euro Swiss. Euro pound, no trade. Euro yen, no trade. Actually, Euro yen, we were looking for a short position with confirmation, but it doesn't look like we have it. So this could be a pretty simple setup like so. If we break to the upside, just some short-term scalping back to the highs around 148 on the Euro yen. So it could be a direction to play this week. Euro New Zealand, we've been making lower highs and lower lows since 1.71. Traders have been taking a nice chunk of profit here with lower highs and lower lows. So short at 71, good confirmation on Masterflex, some really nice trend systems, and 300-400 pips to the downside. Euro dollar trading at 105.61. Again, dollar index will kind of dictate. We're in some pretty heavy resistance on the higher time frame. Could this be an easy trade back down to a pivot? 102 is a monthly pivot. Okay, we have a bit of a rising wedge going on here with the euro dollar. So I'm looking for potentially a pop to the upside, form a high, and then start to work our way back down to maybe drift into the new year with a stronger dollar. Okay, that's why I'm looking to trade short term this week. Pound Aussie, I got no trade in that one. Pound CAD, we're at 67 and change, almost 6,800. There's some big structure back here around 1.70, 1.72. This may continue to drift. We also have some nice pivot alignments, 1, 2, 3 weekly pivots, plus a monthly. So does it drift higher and then fade back down? If so, that's where I'm looking for some profit. Pound Swiss, 14.58. Both pounds, so the Bank of England and the Swiss National Bank looking to raise rates this week. This is another one that if price can get above the 200 EMA and the daily, I'm looking to see if we can get back to 1.20 on the pound Swiss. Pound yen, no trade on pound yen. Pound New Zealand, no trade on pound New Zealand. Pound dollar, I've already taken profit at 1.20 off the flash crash lows at 104. New Zealand CAD, we booked profit. Man, this thing's been ripping to the upside. Book profit back here around 82.50 to 8,300. If you took some additional alignments, pretty easy to get another 300 to 400 pips to the upside. New Zealand Swiss, we took some profit around 6,000 from levels around 57. New Zealand yen, we're creeping up to these highs. We set this up for a break with just a simple deployment. If it breaks below 85.40, we can then start looking to short it. If it goes up into new highs, we're just looking at this. Previous resistance maybe becomes support. And we'll see if the New Zealand yen continues to run. But right now, we're just kind of waiting to see what price wants to do, if this is a false breakout or if this is actually going to continue to push higher. New Zealand US dollar, this week we'll find out, right? Do we get a pullback towards this weekly pivot? We've had a nice little run from 5,500 all the way up to 6,400. That's a nice recovery against the dollar, right? Challenge this high, challenge this high. I like this FOMC pocket all the way back to 6,600. But I would almost suspect that there's going to be a pullback coming on dollar strength sooner than later, probably this week. Dollar CAD, I don't like dollar CAD. I'm going to stay out of that one. Dollar Swiss, potential falling wedge on dollar Swiss. We're trading at 93.26. We're going to see what happens this week. If there's a falling wedge situation, we're looking for dollar Swiss to pop back up here towards this monthly pivot. That's around 96.50. We have lots of pockets back here as well between 96.50 and 97.50. I ideally like that spot. I am long on the dollar Swiss for that reason. If it goes lower, that's fine. I'm gonna add more, another trade down here towards 9,100 and 9,000, and I'm gonna keep long on the dollar Swiss. Okay. Did you cover Cat Swiss? Yes, Ken, I did. I'm still looking to go long on Cat Swiss with confirmation. I mean, look, it's bearish right now. The alignments on Cat Swiss are bearish, but I'm looking to stay, small with the trade size. We have a decent bar count, decent pivots, decent pockets. So I'm looking to stay long on CAD Swiss, just with small positions, kind of build off of. We're actually pretty close to historical lows on that pair. And then dollar yen, took some profit on dollar yen once we hit the 200 EMA. I haven't been long on the dollar yen. I haven't done anything on dollar yen. I'm just out of it. Okay, NCLH crossing 15. Wall Street's open, so it's opening bell. I'm going to start wrapping stuff up. I do have some stocks I need to attend to, or tend to rather. Intel, I need to start getting in a covered call. My break evens are on 28.50. I want to look at a quick repair in that one for a covered call this week. Snapchat, another one. But break evens are on 9.16. I want to get in like a 9.50 to $10 covered call, and just kind of assess the portfolios for this morning. And then class at the top of the hour for equities on demand. All right. Let's see here. Comment comes in: if the Fed raises rates again this week, the recession will be greatly amplified. Tweeted. Okay. I mean, I don't know. Elon Musk is kind of a troll on his own platform. It is what it is. I mean, is it out of the ordinary? I mean, is the Fed not going to raise rates this week? It's like, you know how they've been forced to be transparent for the last 4 years, 8 years, 6 years? It's like ever since Yellen stepped in, post Bernanke era, it's like Bernanke leaves, Yellen steps in. There's way more transparency, way more political influence, and the Fed is now, kind of the beacon for what other central banks do. They get a lot of mileage out of jawboning. They talk a lot, and then eventually they take some action. But this year they were doing a lot of talking. The market was doing a lot of moving, and then after all that, then they started to actually raise rates. They were the last to raise rates, although they were like the first to talk about it. So, I mean, I think it's a foregone conclusion they're going to raise rates this week. It's just, do they raise rates? And if so, okay, how much? Probably what the market expects, which would be 50 points. And does it shift the expectations going into 2023? Because if it does, then we'll see some pricing that will continue to play out with dollar strength, dollar weakness, or stock market strength or weakness. But I think the Fed, and look, it's really simple. Does the Fed want to see a recession only, or do they want to handle and witness and deal with a recession with high inflation? I think if their objective is, it's pretty much inevitable we're going to have a recession, well, let's try to take care of this inflation problem. And how do they do that? Well, one of their tools is just raising rates and make everything restrictive and compress the living crap out of the markets. Make it so nobody wants to buy a house right now. Make it so people are losing jobs. Make it so the forward guidance is super soft and super conservative, and it brings kind of everything back to normal. Not normal, bad, but we've also come off of essentially a euphoric bubble. So I don't know. I mean, taking a tweet from Elon Musk about the economy is whatever, dude. Just how about you focus on Twitter when everyone seems to be unhappy, right? Yeah. If anything, we will definitely have volatility. That is like no brainer, and that is why we're gonna do some bonus sessions this week. Okay. All right, so I'm going to switch gears into the stock portfolio. I'm going to start opening up my platforms and get things ready for class at 10 o'clock. If you have any questions, let me know. Thanks for being here this morning, everybody. Let's go and wrap things up for the Pulver Report. Remember, I'll just flash this one more time right here. Schedule for this week. Wrapping up today, Tuesday, Wednesday, same time for Flex, 8:30 a.m. Eastern Time. Wednesday, bonus session on my YouTube channel, 2 p.m. Eastern Time for the Fed. Thursday is a bonus flex room. We're going to do 7 a.m. start so we can trade the pound, 8:30 for the euro, 9 o'clock for YouTube, 1 o'clock Eastern Time, Master Flex. So busy week. Looking forward to trading to everybody. Let's kill it. Let's grind it. Let's make some pips. Let's make some profits. And see you in the trading rooms. Okay, thanks everybody. If you do me a favor before you leave, hit that thumbs up button for me. I'll say a quick thanks to everybody. Thanks for tuning in. Let's have a great week. There we go. All right, good stuff. Thanks, everybody. And I'll see you in the trading rooms. Take care. Bye.